What's going on, everyone? My name is Nicholas Merten here from DataDash, and today is February 24th of 2025. Well, folks, I hope you all are having a fantastic day wherever you are, because in today's video, we're going to talk about getting prepared for an imminent move here in crypto markets over the next couple of days, the next week. As we have been ranging sideways for nearly 3 months now, we see further signs of confirmation within price that not only signal we don't have the ability to climb higher, but as we dive deeper into the inflow and outflow data, as well as the altcoin to Bitcoin pairs, it becomes obviously clear that there is a big outflow, a big correction potentially coming around the corner. It is more likely than not that we are going to see a correction rather than an expansion first, and then we can reassess the direction of market price action. We got a lot to unpack here in today's video. If you guys have the time, grab a cup of coffee, stick with me here. If you enjoy the video, consider dropping a like, and let's go ahead and dive into the episode. So I want to start here again by really putting the context around the short-term price action over the last quarter. Ever since we started to break under the 21-day moving average, the market has done nothing but continue to chop. Every single time we got above the 21-day and attempted to make it support, we failed to do so. And for the last few weeks, really the last entirety of February, we've seen that every single time we've tried to retest that 21-day, which is descending, it has acted as a lower and lower point of resistance, and that the 100-day has been attempting to become support. But it is very clear by now, with that 21-day pressing down price, that we are going to likely get squeezed downward here into the 200-day moving average, and potentially even lower. I want you guys to really be prepared here for what may be coming, because if we take a look here at the core relationship between price and the moving averages, not to mention the months of stagnation, we have some serious warning signs here presenting themselves in price. But it gets a little bit worse when we take a look at the inflow and outflow data here. When we take a look at the ETF, which again, this is the big spigot of capital that is supposedly going to come from Wall Street to provide that bid side support for Bitcoin. Well, we've had a correction here. We've pulled back from 108 here to 95,000, a nice solid correction in Bitcoin's price. And what are we seeing? Well, over the last 3 weeks of market action that we have here for the ETFs, we can see a net outflow of around 10,000, a little over 10,000 Bitcoin from the ETFs. Now, I understand people will say, of course, obviously GBTC had some outflows. It doesn't really matter. That's less Bitcoin and ETP products. But beyond that, you can also see here that IBIT has really slowed down, less than 1% growth throughout the month of February. And along with that, you had a huge outflow of Fidelity. So a lot of that is probably just rotation from one ETF to another. Irrespective, we don't know the answer to this. No one really does. The fact of the matter is that we have now the ETFs acting as a means of outflows. This is really not good for the sustainability of the trend. And it is a big change in character from the sentiment that we saw between October and November, as well as December and January, which remained relatively optimistic. So it makes sense why we're seeing this correction here. If you consider just a month-over-month change here, we're talking about nearly, actually in this case, pretty much a 60,000 Bitcoin difference in the inflow and outflows from what we saw back last month. Not to mention, we're talking about tens upon tens of thousands versus what we saw back here in October, November compared to February. This is actually the worst outflow month we've had so far. Now, in percentage terms, right, this isn't absolutely dramatic by any means, but it does absolutely show here that the buy side demand here, especially what played a role back in October and November, as you just clearly see here on the charts here between the month of October, November, and December, right? These were 3 golden months for Bitcoin's price action. And you can see the difference in the amount of money and capital flowing in versus what we're seeing now, which is capital outflowing out of the market. We can also see MicroStrategy here has really been dropping the ball, or at least not able to raise as much capital in order to go out and buy Bitcoin. Its arbitrage opportunity between its share price and the convertible note raises that it's conducted have seemed to dramatically slow down, and that's likely a sign that the risk on sentiment and credit markets in order to engage in these convertible notes has gone down. The confidence in Bitcoin from an institutional perspective, at least at current prices, has slowed down quite dramatically. And this has really started to wane on the entire market as a whole. It's become clear here. I think we've had signs for a while, considering the rally we had, for example, back in November and December, when altcoins really started to garner dominance, not exactly towards the relative highs of 2023, which again is another kind of warning sign here. But the main point that really had me concerned is the clear resistance at the 200 week. And now we are now down at fresh new lows, the likes which we haven't seen since since June of 2023. So we're talking about more than a year and a half here. Altcoin dominance has not been this low, right? And after that, really, we're entering in territory. If we just kind of take a look from the long-term perspective, we're not only breaking below the 100-month, which is shockingly concerning that has not been able to become support, but the fact that the 21-day is still pressing us down this low tells me that we're likely to go all the way down to potentially retest down to these lows here from January 2021. This historic range of significant support in the past, here between around 5% to around 6%. And that means here at 8.4%, we've got a ways to go. We've got a ways to go down here. There's going to be a big capitulation in the altcoin market. A lot of the froth, a lot of the nonsense, a lot of the, just dime a dozen worthless types of narratives that the market has propped up here. We've already seen a big unwinding of this in the AI agent stuff that we told you guys to stay away from and not touch with a 10-foot pole. Virtuals, a lot of those really started to correct big time. And I think the biggest thing above all is that there's still a lot of froth out there. There are too many layer 1, layer 2 protocols out there that really need to be wiped out, that need to really be ineffective, eliminated from the market because they're not really showcasing any significant traction. I think essentially the chickens have come to roost. You're seeing a real fundamental realization, broadly speaking, in the market that there's just too much altcoin dilution. And there are too many weak narratives. Take a look at ETH here. After a 73% correction from those crash lows, right? We had a bounce up here, and we're attempting to get above the 21-day here. But the first daily candle we have here closed above there is followed right behind it with a minus 4% candle. And it's a question of whether or not we're really going to be able to hold in that 21-day. This is probably one of the better altcoin charts that I've seen here. One of the few altcoins getting above its 21-day moving average. You take a look at Solana. Solana just is now breaking through its 200-week moving average. It's not even coming up to retest that 21-day. Big change here in regards to the price from where it was around 0.0028. Right now, we're sitting at 0.0016. That's a lot of change for pretty much a month's worth of price action, just straight downtrend here. And again, likely completing and continuing the process of proving, as we've talked about for a long time, that this was just a big distribution window for insiders in the Solana ecosystem, not to mention all the farming they made off of Pump.Fun and all the meme coin craze. So you can just see very clearly here, absolute distribution, sell side pressure, and now breaking below that 200 week. I'll just put it this way. I'm not saying that it can't eventually bounce up, but I wouldn't be entering any positions until we get above that 200 week, right? This is clearly looking very disastrous here on the trend direction. I'm not trying to be hyperbolic. Like, you can just see it here very clearly, and you can see it in a lot of other places. XRP, right, as we talked about, above the 200 week, above the 100 month, this is usually the period of time where you want to stay away from these plays. And we can see that since then, this has continued to fade back here against Bitcoin, right? Definitely not the worst looking altcoin. It's held up pretty much where it was in December. So this has been one of the more resilient ones. But still, that inconsistency at the 21-day gives you a lot of hints. And as those moving averages are coming up here, it might provide, kind of buy the dip opportunity down here, right? So maybe down there you can get a better risk reward setup. But for now, we are likely overbought on these pairs. And we're likely due for somewhat of a 50% correction from those relative highs at 3,400 sats down here towards around 1,700. I think that that's very reasonable. That would at least be a better risk reward trade setup for maybe some oversold bounce. But I think in the long term, a lot of these altcoins are not showing positive signs here, guys. Like ADA, for example. This was a darling play back during the November-December rally. Went all the way from 450 sats, 460 sats, all the way here to 1360. And again, setting in not only a lower high from its prior December 2023 highs, a year later, but beyond that, is now facing yet again resistance at the 21-day and barely holding on by a thread on the 200-day, even after this huge flush out we saw. So this tells me that the altcoin markets right now, as I just take a look across, there's Avalanche as well. just continue to fade lower highs every single time. Dogecoin as well, a lower relative high versus its two significant ones back in 2021 and 2022. Just continuing that broader downtrend, that distribution from those who initially bought back here, just slowly selling onto the market here, fading through the 200 week, hoping maybe it can get a bid here at the 100 month. It is incredibly difficult to find good looking altcoin charts right now, guys. And the problem is it's not like that none of them are, trending above their 21-day, or maybe they're not meeting certain criteria that I would like to see. It's the counter opposite. It's that they're actually like crashing through the kind of peak capitulation points, the 100-month, the 200-week moving average, those areas where really people should be entering in on a dip if there is going to be that future risk on sentiment, if we are really in a bull market, if we are going to see greener pastures over the next couple of months. So this is just an important thing to keep in mind here. When we see that the 200-day for all the entirety of the altcoin market is not able to hold a support when we needed it most. This is likely showing we're coming down here to the 200 week. We'll be right smack where we were probably back in August or September of 2024. Now that's if we're lucky, if we hold, because if you look at the big picture, right, we take it here to the monthly. This to me looks like a topping formation, that this 370 to 430 billion dollar range has been resistant since 2021, and it's probably going to continue to be for a while until we get a bigger capitulative move and finally start seeing some fundamental developments in the altcoin space. Just take a look at this chart, guys. I don't mean to be a Debbie Downer here or anything like that. I know some people see it that way, right? Maybe we are establishing higher lows here along this line of support. We've got it outlined here in the chart. Of course, we're ignoring the COVID anomaly here in 2020, right? Looking at the more kind of clear trend here since back in 2018. But that also puts a lot of pressure here on the altcoin space to show up, because if we come down to this valuation range and we snap through this line of support, what's that telling you about the trend confidence on altcoins, right? The ability to even establish higher lows and maintain an upward trend. We clearly aren't going to the upper band of this channel anytime soon, right? So the question is, can we at least hold the baseline of support here, even though this still means we're likely going to lose dominance over time to Bitcoin? We got to be really sharp about which plays we put our capital into. So case in point here, again, just kind of to bring it back here to dominance here. If we step back, I think we've got a ways to go here on the altcoin sector. I know a lot of people would ask me to look at maybe some individual pairs in the market, as we already kind of did look at some of them, but I would tell you guys, I think it's going to be across the board here. The premium people are paying for altcoins is going to go even lower, and beyond that as well, you are going to see a lot of names get wiped out, as is required in every type of flush-in event. You're going to see the weak positions go even lower. The few market leaders hang in there. People will start initially buying on those corrective moves. They'll be the strongest plays during that correction. And that can help you find which narratives are actually going to sustain going forward if we do see more positive sentiment returning here. And again, at the end of the day here, we bring it back here to Bitcoin because I want you guys to keep a few things in mind here. The first thing is that while here in the short term for nearly a month, we've been consolidating sideways, and while we are seeing these initial signs of a corrective move in price, I don't want you guys to think I'm being like a perma bear. I'm not saying Bitcoin's going to zero. What I am here to say, though, is that Bitcoin, like any other asset, goes through cycles. It goes through broad expansions, like the 600% move we saw from bottom to top, from the FTX collapse lows in November 2022 here to December 2024. In less than practically 2 years, we saw Bitcoin make a 600% move. Absolutely smashing versus the prior decaying returns of the past, right? We, in the prior cycle, had 12,700%. The next one we had 2,120%. So you're talking about the decay in multiples here is quite significant, right? Basically 1/6 of what we saw in the prior cycle. And then this time around, we still had a 600% return. That's not as much of a decay as before, what we historically see, meaning that this cycle was really a big upset. We got to the six-digit figure level here at around $110,000. And we can see very clearly in the signs that it shows that, we're probably exhausted for now. We need to have some kind of pullback. But this doesn't mean it's a bad thing. This is an opportunity. This is where we can think about accumulating, where we can start finding strategies that we can implement to be able to slowly but steadily get exposure during these corrections and be able to ride the wave higher. Right. So while I'm here trying to give you guys some guidance here about how to kind of navigate this from a price perspective and understand it, one of the best ways you can go about navigating markets when it comes to crypto is keeping in mind a strategy of dollar cost averaging. And that's why I want to spend some time to talk about our partner here in this channel, and that's BitDCA. Now, BitDCA is a really exciting company. They've been around for many years in the crypto space, since as far back as 2019. They're based in Prague in the Czech Republic. A really solid Bitcoin-centric company. A lot of really great companies come from the Czech Republic. You also got Trezor and a whole range of other legacy companies like BitDCA that are focused on helping you succeed long-term when it comes to Bitcoin. And while I'm all about trading Bitcoin, you can have some allocation and try to time the market. Historically speaking, one of the best things you can do is keep calm and focus on dollar cost averaging, especially if you're focused on the long term. And essentially, BitDCA has done this through its application Littlebit. Littlebit is very similar to applications in the United States like Acorns, where essentially every time you spend on a given transaction on your card through the Littlebit app, you can also be charged an additional amount that will go towards a Bitcoin savings account, where essentially you're stacking sats as time passes. So you can choose the percentage of each payment that you want to set aside and essentially watch your position grow over time. You'll stack more sats, and if Bitcoin, as it historically has done, continues to move up over time, up and to the right, even with these corrections or these rallies, at the end of the day, the trend usually moves historically upward. Bitcoin has historically been one of the best performing assets. It helps you to not get caught up in the volatility and have some huge stake right away, but rather build it up over time and really incorporate this mindset of building a nest egg of Bitcoin over time. So I definitely recommend you guys consider joining the waitlist if you're interested in trying a little bit. I think it's a really exciting application. If you're interested to learn a little bit more about the BitDCA team as well as their roadmap, they've got some really impressive materials over on their website. And one important thing to keep in mind here is that BitDCA does have a token tied to it. It's a core utility token tied to the platform where essentially as time passes and more people are using Littlebit, there are fees collected from the transactions, which serves as revenue for the business. In this case, this will go back in some ways towards the token holders. So if you guys are interested to learn about the tokenomics, learning about the reward mechanisms, all of the key details here, as well as the upcoming SEX listing or centralized exchange listing that's coming on February 26th, very soon here in the next couple of days, then I definitely recommend you guys check out the link down below in the description. They've built a really impressive product. We also as well just did a video review. We had Ryan from our team talking about BitDCA and some of the things that they've been working on. So if you guys are interested to learn more about it, definitely go ahead and check out what Ryan did in that video. I think it'll be very valuable for those of you who are interested. If you haven't started dollar cost averaging, I would definitely recommend you guys have that, especially if you're bullish long-term on the vision of Bitcoin and you might feel overwhelmed about trading or kind of getting into markets. So definitely consider checking that out. Now, I wanted to go ahead and spend some time here as well to talk a little bit about the S&P 500, talk about equities, because this is really the missing component I see a lot. I see too many people, and I don't mean it to grandstand or be critical, but if I can share my 2 cents, I see a lot of people hyper-focused on micro analysis of just looking at crypto markets. And crypto has definitely become a bigger market over time. It is not some little niche, side project. It's massive. It's a multi-trillion-dollar market. That being said, crypto is still, on the grand scheme of things, much smaller than what's going on in equity markets, which are valued at tens upon tens of trillions of dollars. Even if we're just focusing on U.S. equities, when we talk global, it's even bigger. But the point I want to bring to your attention here is that whatever happens in equity markets will very likely have an effect on what's going on in crypto markets, right? So even if you are bullish on crypto long term, you need to understand here that if there are broader corrections in equities, it is very likely going to have some degree of impact on how crypto performs here, at least in the short term, right? So even if you believe the number goes up to the right, you have to keep in mind here that there can be corrections in Bitcoin, and there can especially be corrections when we see that way down in equities. Take a look here. Back on Friday, we had a 1.7% dip in the S&P 500. This was the worst trading day since back in December. So from basically more than 3 months here, about 2 months of price action. We're breaking down below that 21 day. We've struggled to make really new highs in price or really be able to expand to any serious extent. And this is coming up again on the line. I know I beat it like a dead horse here, guys. I'm sorry for rambling so much about it, but I'm not going to ignore it here because it's very important. The 95-year-long channel that the S&P 500 has been in, and it's made up again of the two most euphoric points in history, the dot-com bubble and the roaring 20s. If that isn't significant, I don't know what is, right? And the fact that this range has continued for, the greater part of the last few months, last 4 months here, has so far acted as resistance and we haven't been able to get above it, tells me that there's something important here. Now, does this mean, as we did the two prior times, does it mean that we are going to be on a decade-long, kind of lost decade here in asset markets or some absolute capitulative flush to the lows? No, it doesn't mean that we have to have that happen. But it does show us, I think, similar to what we had back here in COVID when we were getting very close to retesting that prior high, that it probably means that we're due for a substantial correction, or at a minimum some kind of cool down here before we can creep up and try to press up against there. There's of course always the theory that we're going to enter some new paradigm, and that's either due to monetary debasement or AI just absolutely breaking the paradigm of what we know, how things work in the world, and essentially creating abundance and value, the likes which we've never seen before, that would just push this up to S&P 500 10,000 or something. Guys, look, I am I'm a pragmatic optimist. I look up and to the right. I believe markets will generally go up. I believe the world is getting better and better every single year, every single decade for the most part. That all being said, there are periods of time where markets will go through cool downs, as we saw in 2022. And along with that as well, there are just periods of time where people pay a lower multiple for the same companies. The financials could not change, right? They could stay the same, but people will pay less of an equity premium on these companies. And the same goes for assets like Bitcoin, which, whether we want to say it or not, they're risk-on assets, right? I know some people would like to see it as a hedge. They would like to see it as this kind of buck against the system. I'm all for that. I do see where people are trying to gain that perspective. But at the end of the day, Bitcoin performs best during risk-on windows. It is an asset that helps against monetary debasement. It is a place where when people have excess wealth, excess income, basically disposable income that they can afford to lose, they are putting it in these higher performing assets like Bitcoin, right? So that's an important thing to keep in mind at the end of the day here is just kind of shaping your mindset around that. So when we see this weakness in equities, when we see the NASDAQ basically topping for nearly 3 months now, throughout the month of December, January, and February, right, trying to make this line of prior resistance between the dot-com bubble and its prior significant high, back here in 2000 and the COVID highs, trying to make that a new means of support, right? So far, it's holding here, but if you get below that 100-day, and especially below the 200-day, I would be looking at the next moving averages, which are the 200-week and the 100-month. And that is a far ways away from where we are right now, guys. Would not want to get caught in a 30, 40, 50% down move in equities. And I know some people think that that can't happen, that there won't be another dip unless there's some major catalyst. You might be surprised. A lot of this rally here that came in was due to AI optimism. If a lot of that's getting repriced and NVIDIA loses a lot of its equity value, climbing from a couple $100 billion market cap to 3.3 trillion at the time of recording, if Apple Intelligence doesn't bring Apple a ton of new revenue, its current valuation of 3.7 trillion very likely is going to correct. And Microsoft, which is already showing the price action, it's hinting it to you right now, using the 200-day as resistance, the 21-day, the 100-day, all flipping as resistance rather than support, and a stagnation period of more than a year. If these multi-trillion-dollar entities start correcting down 20, 30%, it's not only going to have major ramifications for the broader performance of equities, it is also going to put a damper on the performance of Bitcoin in the short term. So that's just something to be in mind, keep in mind here. There's no surprise why this is happening at the same time as you're seeing a weakness in equity markets. There is a strong correlation between these two. In the same way that equities and crypto move up together, they usually move down together. It's not me trying to speak in absolutes. It's not me trying to be overtly bearish on Bitcoin or bashing the vision of Bitcoin. I love Bitcoin and what it stands for. I absolutely do believe that there's a place for Bitcoin in the world. And no, it's not going to zero or anything like that. Right, unless there's some freak event with quantum computers or something like that. But at the end of the day, Bitcoin is definitely one of the best performing assets, but it does have, in the same way it is one of the best performing assets, it has some of the harshest corrections of any other asset out there in the market. And we just saw back here between March of 2024 here to August, a 30% plus correction. Considering that, even if you just got something like that from the relative highs here, that means that we're coming down here into the $70,000 range. And that might be great. We can turn that prior relative point here, March of 2024, maybe into new support. Something along those lines could happen. But something's got to give here. Unless we start seeing some signs of optimism, some reasons for people to keep buying in, new liquidity coming to the market, I think that we're due for a correction here. So I'm just here to try to get you guys prepared for that as much as I can and help you be able to make, at the end of the day, the most informed decision. Because at the end of the day, it is your choice. No one's going to make it for you guys. So that's an important thing at the end of the day. I think, again, as we talked about earlier, dollar cost averaging is a great way to kind of navigate this uncertainty. But if you are trading in the market, especially if you're trading with leverage, be careful here in these periods of time, right? Don't be over leveraged here. Get prepared for the next wave of opportunities when that altcoin capitulation comes in. That's one thing I wanted to talk to you guys about as well. One of our other partners here, which is DYDX. They have one of the best decentralized exchanges on the market. If you guys are still looking for an exchange tool to utilize for your Bitcoin or altcoin trading, whether that be large established players like Ethereum or Solana or some of the upcoming emerging narratives in the market, and you want to trade that volatility or trade with a bit of leverage, again, you can do that here through DYDX. It's one of the most consistent, trustworthy, and actually trustless exchanges out there when it comes to the DEX space. Not to mention it gives you centralized exchange functionality, which is something very difficult to find. And they're going to be having a major UI overhaul. The UI has already been really impressive. I've used DYDX for a long time. We've been kind of following the project over the last couple of years since DeFi Summer back in 2020. But the project has come a long way in really building one of the most premier trading experiences. And not to mention they're going to be having this major UI overhaul here alongside some of their other features like the Mega Vault that launched, as well as the instant market listings. So if you guys are interested to give the exchange a try, I definitely recommend you go ahead and try it out. But beyond that as well, if you're interested, you can also start trading on their new iOS app. So they just recently launched the DYDX protocol on their own native iOS app. So you'll be able to trade all these different market pairings directly from your mobile phone. So it can act as a de facto kind of exchange wallet here in this case. So if you're interested, feel free to check that out on iPhone if you happen to have an iPhone, as you may be someone who needs to go on the go and be able to trade. So I definitely recommend you guys check that out. I'll leave the links down below in the description if you guys want to learn more about it, as well as BitDCA. But at the end of the day, this is the key point, guys. Stay vigilant, stay open-minded. I know there are a lot of people out there who are telling you it's going to go up and to the right and that Bitcoin can't be stopped. And again, on the long term, maybe they're right. But I think there's a little too many people here who are a bit complicit right now on this sideways, this sideways traction. Again, if you're a long-term investor, you're DCAing, not a problem. If you're trading, though, and you're overexposed here, and you think it can't get worse, I would say be a little more cautious. Don't be so certain. I say that in the same way as I'll admit whenever we've gotten things wrong in the past. We haven't always been accurate on Bitcoin's price. No one has, for that matter. But in the same way, I could admit that 2023 and 2024 were great years, great upsets in the crypto space. For those who are more pessimistic like myself back in the day, I'm not going to get caught 2 steps behind. I'm not going to get caught 2 steps behind here and ignore the clear signals of price. In the same way, we accurately called Bitcoin starting to stall back here and to not chase the markets when we essentially continue to set lower highs and lower lows. only until we were to really reclaim that 21-day did the trend really kick off. And that's what matters most. The moving averages will tell us a lot of what we need to know. The inflow data will tell us a lot of what we need to know. So I rambled on a good amount here today, guys. If you made it this far, I hope you guys enjoyed the video. If you did, consider dropping a like. It's a great way to support the channel. Feel free to check out all the other great content we're putting out here in this channel. Ryan, Paul, and Cassie are putting together some great stuff. So if you guys haven't really checked out their content yet, I understand it's new faces to the channel, new personalities, but they are bringing some really good stuff here. They're not always agreeing with me, which is great. Like, we have all fresh opinions here in this channel, which has been kind of a big vision of mine for DataDash in the long run, is to get other people and new voices on the channel. So I hope you guys will give them a chance. Check out some of their videos if you get some extra time over the next couple of days. But until the next video on Monday, I'll see you guys right back here in the next video. Take care, everyone.